Yeah, that's really interesting. So I guess do you see there's the potential for another risk of if we look at what happened in the banking crisis this year, a lot of the some of the banks had to sell uh, their bond portfolios at a loss. They have to realize those losses. So do you see there's a potential for that maybe occurring for the people who've actually been holding the back and holding these longer term bonds, or do you not think that could be an
I
issue?
don't think that's so much of a risk now. I think it was clearly a risk earlier on this year. I think the Federal Reserve is in there and it understands the problem. I would be staggered if Fed officials are not in US or crawling all over US regional banks to try and work out the full scale of the problem. The Bank Term Funding Program, which is basically a way of alleviating pressure on banks, which means that a bank in the US, if it is suffering losses on their bond holdings, can actually put that back to the Fed and sell it at par. In other words, they don't have to realize those losses. They're redeem the bond at they bought it for 1,000, they're going to redeem it at 1,000. That would that program probably will have to be extended, but it's been very effective so far. So I think that that is much less of an issue. I think that this is not. I mean, let me say this: I don't think this is a 2008 situation because I don't think you've got the same leverage in the international system that you saw in 2008. Well, in fact, I know you haven't got the leverage in the international system. It's a moot point to what extent there's leverage in the US system specifically, because there may well be a lot of hidden bodies out there, particularly in the private equity space. But I think the fact is that unlike 2008, the maturity wall when all these debts are coming to fruition is very extended. It's maybe 2 years out. It's not 2 weeks or 2 months out, which is really the problem in 2008. So it's a different type of problem. This is much less a credit crisis and much more a duration crisis. But I think where duration is a problem, the Federal Reserve is actually coming in to support it. I mean, my point is that it's not the fact that the Federal Reserve has got its eye off the ball. It's got its eye on the ball, but the ball is getting bigger, and maybe the Federal Reserve is going to have to put a lot more liquidity to work in coming years. And I think that's the reality of the maths behind the sort of the fiscal problems in the US, etc.